So I'm sure you've seen by now that every single person in the financial space is creating videos online talking about how the market is about to crash, how the market is about to collapse, how we are about to experience a depression greater than 1929, and that our way of life is going to change forever because of this inevitable downfall of the equity markets, of the derivatives markets, all of the things we use to make money in this financial economy. Now, in this video, I want to discuss whether or not I believe this to be the case, whether or not I believe this is going to happen. But then I also want to share with you what I'm doing in the case that it does. Okay, so we'll tackle this one by one. First and foremost, do I believe that the economy, and therefore equity markets, crypto markets, bond markets, etc., to shift? In the case of equity markets, go down. In the case of bond markets, go up. Do I expect it to happen? Yeah, I do. I am no different than the people online in that regard. I do believe that the economy is heading for a pretty rude awakening. And I'll give you a few reasons why. First and foremost, the real unemployment data is just completely skewed. We do not use the only metric that can give us a relatively good grasp on where the unemployment rate actually stands, and that is the U6. It's not the unemployment rate, the U3, I believe. It's the U6, and that takes into account a more holistic view of the labor market. What it does is it includes people who are underemployed, people that have dropped out of the labor force because they haven't looked for a job anymore. See, that doesn't get counted in the unemployment rate. If you stop looking for a job and you stay unemployed, quote unquote, you don't have any work for a year, you just drop out of the unemployment statistics. You're not counted in the U3, but in the U6 you are. That rate is much higher. I believe it's double, if not a little bit more, than the rate you see for unemployment right now. That's a big sign. That is pretty worrisome. That means there are people who are putting strains on households because they have either decided to not look for a job, they have decided that they are just going to remain committed to being underemployed, as in they're going to work their 20 hours, 25 hours, whatever, and they're going to spend the rest of the time at home. Right now, there's a couple million men in America, anywhere between 4 and 8 million men who have simply decided to say, fuck it. I'm not going to do this shit. I'm not going to play this silly game. I'm not going to go date women. I'm not going to find a job. If I have a job, it's going to be a part-time one. I'm going to be delivering pizzas. I'm going to be working at McDonald's. I'm going to be working at the video store down the road, whatever it is. It's going to be underemployment. It's not going to be very fulfilling. It's not going to bring in a good paycheck. And I'm certainly not going to give a shit about it. That's what 4 to 8 million men, I believe. You can correct me on that, but I believe the last time I looked up the numbers, it was 4 to 8 million men in America have decided to do that. Women, also 1 to 2 million women, I believe. I think the total somewhere in that 6 to 10 million range. That's a pretty big chunk of the population that have just said, no, I'm done playing the game. Because if you go up the ladder, there's more people that are trying to play the game, but they can't play the game. They can't find gainful employment in the degree that they have or the multiple degrees that they possess because they decided to switch or keep educating themselves. Those people can't find work. And if they can, it's not good enough. More people are living with their parents today than ever before. More millennials, more Xers. They're living with their parents. I know in my case, I know someone who's 51 years old, 52 years old, that still lives with their parents. 51, 52 years old. Imagine that shit. Imagine that. Having 2/3 of your life, by all metrics, taken up, and you still haven't gotten out of the house. Now look, if you want to live as a clan, I get it. I personally like that idea, living with a family that I've created out of friends and spouses and kids and extended family, etc. I don't mind that, but that's not the case here, and that's definitely not the case in America. This is not by choice. This is not because people have decided to pool incomes or create a more loving familial structure. No, it's out of sheer necessity. It's out of, I can't pay the bills. I can't afford the rent. Even in a city like Pittsburgh, a lot of the rents, at least in the nice spots, a little pricey, a little up there. But in any case, the employment data is pretty terrifying. The amount of people who are living at home, pretty terrifying. The amount of people who are simply quitting playing this game, pretty terrifying. And then you look at the markets themselves. The equity markets are overvalued by just about every metric. Just about every metric. PE ratios are off the fucking chain. If you see the recent rise in the stock market in comparison to manufacturing data and new orders and how quickly backlogs are getting taken care of, as in there's no new orders coming in and all of the back orders, all of the excess orders, they're getting completed, which means business is drying up, business is slowing down in the manufacturing sector. If you compare those two things, they make no sense. But if there's one thing for sure, it doesn't make any sense here. It doesn't make any sense in Germany. The DAX hit all-time highs, even though manufacturing data is at the lowest point since, I believe, 2011. That's pretty shocking. UK, same thing. Their stock market's hitting all-time highs while they're flashing every single recession signal you could possibly see. Japan in a recession. The Nikkei is at the highest point we've seen since the 90s, since that big collapse after we had the Plaza Accords and that huge boom in the late 80s in Japan. It's looking messy. And the FOMO is off the charts, especially with NVIDIA. You've all heard of the Magnificent Seven. You've heard of the Magnificent Seven. The 7 companies that make up 25% of the current stock market, the S&P 500, in terms of weighted index. But really, it's only 4 that are driving profits right now, that are driving gains in the market, which means it's a house of cards. It's built on sand. That sand could get washed away at any moment. And in my view, it's only a matter of time before the chickens come home to roost, until inflows to the market start slowing down, because you're going to see more layoffs, more job cuts, more people who are underemployed that simply can't invest, people that are underemployed who simply can't pay their bills, auto repos at an all-time high, at least since 2008, the last great financial crisis. You have an entire pool of people who are in forbearance that simply don't pick up the phone. They don't pick up the phone. The people who lent them money, the people who have extended these gifts, really, to people who couldn't afford their mortgages, these people just don't pick up the phone. They're like, fuck it, I'm not paying the mortgage. You said forbearance. I said, okay, we're going to do that forever. So they're just not picking up the phone. So who's on the hook there? Institutions. There are so many things going wrong at the same time that it would be unreasonable to think that this isn't going to come down in some pretty catastrophic way. Now, with that being said, first and foremost, I always clarify, do not have fear over this, because you cannot control the equity markets. You do not control the economy. You do not control people creating jobs, people hiring people, people increasing wages. You don't control this. All you can control is what you do about it and how you prepare, both physically and mentally. And that's what I'm going to get into next, step 2, which is, if you want to prepare, I'll share with you what I do. What I do is pretty simple. I continue to invest. I don't stop that. I continue to invest. I dollar cost average into Bitcoin. I'm a huge Bitcoiner. Whether you are or not, up to you. Don't really give a shit. Do your research. Don't take my word on it, and don't write it off either. You need to do your own research, your own due diligence on that. But I dollar cost average into Bitcoin. I dollar cost average into Ethereum. I like XRP. I like those 3. No other cryptos really catch my eye, though I felt highly about them in the past. In any case, I dollar cost average into them so that my cost basis stays low, because I realized over the course of time, the gains are so good in crypto and the underlying technology is so beautiful that even with 75% drawdowns like I've seen in my portfolio before, it's still worth it. It's still worth it over the long term. And that's why I also stay away from stocks. I'm out of stocks personally. I don't trust the stock market. I believe it's a Ponzi scheme. It's built on fake money, currency that does not exist and is only going to continue to depreciate. And you may be saying, oh, well, Nate, but look at the gains. It's up 35% this year. Yeah, but what's real inflation? Real inflation is 50%, on some goods 100%. So you're not even keeping pace with real inflation right now. And we're talking about an extraordinary year in the stock market. The stock market doesn't always go up 35%, my friend. The average is 8. 7 to 10% is that range. The average is 8.5. So we're having an extraordinary year in the stock market, and yet you're not even keeping pace with real inflation. I know this, and you know this because you go to the grocery store and you see what the fucking prices are. So don't tell me, oh, but the CPI says 3.5 or 3.6. CPI is a load of shit. CPI is a load of shit. PCI or PCE. Yeah, PCE, load of shit. Like they're all loads of shit. The metrics are all load of shit in terms of that. So you're not even keeping pace with real inflation with the stock market, and the underlying structure is so shaky. There's no underlying technology. The companies that are actually driving profits and driving value are so overvalued. And they make up such a large weight of the market as a whole that there's just so much risk there for me. So I don't deal with it. I don't like it. Now, granted, when it comes down, I'd be a fool to not buy it once it crosses 3,500. Once S&P falls to 3,500, I'd be a fool to not buy it. I'd be a fool to not buy it at 3,000. I'd be a fool to not buy it at 2,500, 2,000 if it gets that far, which it could. I'd be a fool to not buy. That's 2007, 2008 levels, 2009 levels. To buy in 15, 16, 17 years after a correction, a big one at that, even if the recovery in the market is lackluster, even if we get a shitty recovery out of whatever is coming for us, that market value is going to fly. The nominal value is going to fly. So I feel like buying in at that point is just reckless not to do. But I'm out of stocks. Now, outside of that, I like owning gold and silver, physical metals that you can hold in your hand. I like looking at my coins. I like looking at my bars. It feels good to know that I have real money, scarce money, that is holding its value and keeping pace with the dollar's decline. That feels good. So I would suggest some of that because you never know if there's a grid down scenario that is barterable, though the mechanics behind that are questionable. I think it's better to have it than not, even though I think guns and ammunition are probably the best in that case. But have some gold and silver, and then have some physical cash on hand. Don't leave all your cash in banks, especially if you don't have 250, especially if you have over 250,000 in one bank. That is just reckless. That is just reckless. You are really trusting Jamie Dimon and these bankers to give a fuck about you. Don't. Trust me. They have no worries about whether your monies are safe or not. They don't give a shit. So don't keep $250,000 in any bank. Keep some physical cash on hand just to make sure that you have it and that you can transact if something bad happens, if a bank goes down, etc. Open up multiple bank accounts so that you have it spread out. So if one bank fails, you don't lose all your money, or at least if it's going to take some time before the Treasury comes in and creates some sort of program, either bail out, bail in, whatever it is, you're going to have some cash to continue to fund your life. Last thing you want to do is have one central point of failure. Ask the Empire. Luke Skywalker put an end to that shit real quick. So don't do that. And then other than that, in terms of preparation, have food, have water, make sure that you always have the necessities for life, because that's the biggest thing. It doesn't matter what sort of investment you make monetary wise or in different asset classes. If you don't eat and you don't drink, you die. So make sure you don't die, at least unnecessarily, because one day you will. But if you can prolong it a little bit, probably a good deal. Now, the last way I would advise you to prepare, this is what I do as well, is to work on yourself. Increase your knowledge. Increase your tool belt of skills. Learn new things. Start projects. Start a business. Start creating content. Do all this shit now, because this is when people are fearful. This is when they're going to panic. And especially during those times of chaos, if you know how to buy a business for cheap and negotiate a deal, you'll probably get a good deal on a brick and mortar business with good financing terms. If you know a little thing or two about your real estate market, you might be able to swing some deals, build up a little portfolio for yourself. If you know something about the car market, you can see car values are really coming down now. You might be able to swing a few deals there, start a little car business. Learn something about your area, learn something about different markets, different skill sets, shit, even trading itself. And you'll be a whole lot more confident when shit hits the fan to actually go out and make deals. If you don't start learning now, you're going to be too scared to actually go out and make deals and build a business. And if you don't have the cash on hand, if you're not saving, if you don't have an emergency fund, which I always advise, have at least 6 months. They say 3 to 6, have 6, if not 12. The more cash, the better. I'm heavy cash right now because I'm waiting. I'm waiting for the shit to come down. Because the unfortunate reality is that people have built this thing up, and what goes up must come down. I'm going to be on the other side of it. I ain't catching no falling knife. I ain't cutting my hands, but I damn well know that I'm going to pick that knife up and I'm going to start slicing and dicing whenever this shit gets real messy. So yeah, those are just a few things I would do. And other than that, don't read into the news too much. Don't be fearful. Don't let people sway you in terms of their opinions, even myself. Listen to it. Take it for what it is, somebody's opinion. Fact check any data. Really look into their eyes to see if they are telling the truth, with me included again. Really do your due diligence and ask yourself, are they being real? Are they being honest? Do they have my best interest in mind? Do they actually care about what they're creating, or are they just creating this because they want to get clicks and likes? I remember I saw somebody on YouTube say that the best hustle in 2024 was going to be to create financial collapse videos, economic collapse videos. And I was like, dude, like, if you're going to create those videos, at least provide some value in them. Don't just create those animated videos of various influencers talking about, oh, the stock market this and gold this and blah, 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 just so you can farm views. Or don't just create these videos with all this hype without providing any solutions or without having a level head or anything like that. Like, don't pay attention to those people. Pay attention to the people that you believe are actually being honest, that actually give a fuck about you, that don't want to see you fail, that don't want to take advantage of you. Because remember, if it's a free video, which it is on YouTube, you are the product, just like on Instagram, just like on TikTok, which means that every view you give them, every like, every subscribe, you help build their business. And only help people build businesses if you believe they're worthy of building a business. With that being said, that's all I got for you. If you have any questions, comment them down below. I'll respond to them in short form content. And I'll see you in the next video. Much love. Peace. It's the new Da Vinci. Out.